recording. All right. So we are all aware, if not all of us, some of us were aware that right now, public sector has its own reporting standards, which we call the Ipsas. Okay, the public sector has its own reporting standards, which we call the Ipsas. Okay, these Ipsas are issued to underpin the treatment of certain transactions. Okay, these Ipsas are issued to enable maybe the financial accountant or the preparers of financial statements in the public sector to be able to deal with certain items or certain transactions. Okay, it is likely possible, or it is possible that not all the transactions that happen day to day or that happen in the public sector are going to be regulated by these standards. What does that mean? It means that as a financial accountant in the public sector, you might come across a certain transaction where if you look at the Ipsas, if you look at the reporting standards, none of them will be relating to that particular transaction. But you have to account for that particular transaction. What do you have to do? Do you have to use your own professional judgment? No. That is why the International Public Sector Accounting Standard Board issue guidelines which are included in a conceptual framework to guide preparers of financial statements, in a sense that whenever there is an event and that particular event is not covered by a specific standard, you have to make reference to the conceptual framework and decide whether this particular transaction can be classified as an asset, or this transaction can be classified as a liability, or is an expense, or is an equity item, or is a revenue item. So the basic understanding or the basic purpose for the conceptual framework is to help the preparers of financial statements to deal with issues that are not covered by a specific Ipsas. All right, that is the purpose for the conceptual framework. All right, another reason for the conceptual framework is that, okay, before you go ahead to account for particular transaction using standards. Okay, let's look at the Ipsas 17, which is property, plant, and equipment. You can't just stand up and say you are going to account for property, plant, and equipment. First of all, you have to recognize an asset. You have to recognize an asset in the books before you now use the standard to account for it. When should we recognize an asset? Those recognition criteria are being captured in the conceptual framework. If you want to prepare the financial statement, how should it be prepared? What are the major categorizations that you should have? Those things are captured in the conceptual framework. So before we start, the purpose for the issuing the conceptual framework is to help the preparers of financial statements deal with issues that are not covered by a specific Ipsa. Okay, that is a basic reason for issuing the conceptual framework. What do we call the conceptual framework? Conceptual framework is a document developed and approved by the International Public Sector Accounting Standards Board. It's a document that is issued as a supplementary note to the standards, because they know that not all the issues are being covered by the standards, because they only develop a standard for issues that need their attention. There are some issues that are happening in the business world, but they are not aware of it, so they can't issue a standard to regulate those particular issues. But as an accountant, you'll be encountering these transactions every day. How do you go about it? You have to make reference to the conceptual framework. So the board is giving the conceptual framework to prevent management or accountants from using their own discretion whenever they want to account for certain items. Okay, the board was established by the international, the IFAC, and the board has this mandate or objective. The board is to save the public interest by setting high quality public sector accounting standards and by facilitating the adoption and implementation of this. thereby enhancing the quality and consistency of practice throughout the world and strengthening the transparency and the accountability of the public sector finances. So they are there to develop accounting standard, but this accounting standard should be in the public interest. When the standard is being applied, it should make sure that the informations are being presented fairly. Okay, and they are also issuing these standards to prevent accountants in the public sector from using their own personal judgments. Why are we using the standards? To ensure transparency and also accountability in the public sector. So know that the government, in their own interest, they will not develop accounting policies that will favor them. No. There should be a worldwide acceptable standard that should be used. And that particular one, we can see that, okay, people who are setting the standards are independent. They don't have any relationship in the government sector of Ghana. They don't have any relationship with the government of Ghana. So they can't develop a standard that will favor the government. No. They are developing the standards, taking into consideration the interest of the public, the interest of the stakeholders. All right. So these mandates or objectives can be classified into three. So the objective of the mandate of the body is to issue high quality accounting standard for the public sector around the world. That is why we have the Ipsas to promote the acceptance or the convergence of the standards. So they have to make sure that, or they have to encourage people to be able to see the need for adopting the Ipsas. So they have to also promote it, organize seminars to talk about people about the advantages and the benefits or the opportunities that if you adopt the standards will be presenting to your country. So they also have to promote that. So how do they promote that? They can organize, because maybe in Ghana right now, we don't have idea about what the Ipsas means. So we need education. So those people will now organize seminars, and they will come and talk to maybe the people in the high authority in Ghana, or the government of Ghana, and or the Minister of Finance. They will come and they also attend a seminar, and they will talk to them about why they should adopt the Ipsas, and what are the benefits that they will be getting from using the Ipsas, and how Ipsas is going to improve upon their reporting systems. All right, to make other publications and studies that support the implementation of the standards issued. That is why they even have the conceptual framework. So they know that a time will come, the standards will be ineffective, because there's a transaction or there's an item at hand. If you look through all the standards, none of them is relating to we can't apply any of them to them. So what do? We have to now make reference to something that is telling you that whenever this thing happens like this, or whenever you see something like this, it should either be an asset, liability, or equity, or expense, or income. So that's why they have the Ipsas. Okay, in meeting this objective, the board sets international public sector accounting standard boards and also recommended practice guideline for use by public sector entities, including national, regional, and local governments and related governmental agencies. So they will issue the standards, which we all know, the Ipsas, and also some practices that are recommended to be carried out in the public sector. Okay, so that is it. Let's look at what is the role of the conceptual framework. What is the conceptual framework trying to achieve, or what is the role that the conceptual framework will be playing in the public sector? Okay, I've said that already. The conceptual framework for general purpose financial reporting. Okay, we are going to be looking at what we call the general purpose financial reporting, and also the specific purpose financial reporting. For general, is a financial statement prepared and issued to us, we the citizens, that we don't have any power to request for certain information. So information in the public domain, we can say that they are serving general purpose. It is for everybody. Everybody can have access. But situation where the Parliament of Ghana will ask Ministry of Health to give them their statement of financial performance, you see that not all of us will have access to that. So they will prepare that particular one to meet the needs of Parliament. And that is what we call the specific what purpose what the specific purpose financial statements. All right. So that is for the specific. The specific is prepared to meet the needs of what certain what category of people. All right. So the conceptual framework for general purpose financial reporting by public sector entities, which is the conceptual framework, establishes the concept that underpin the general purpose financial reporting by public sector entities that adopt the accrual basis of what accounting. So if you are public sector, Ghana, we are moving towards what the adoption of the public sector of the accrual basis. Although some of the institutions are still using the old cash basis, most of them are now moving from the cash to accrual basis. And that is why you see your financial statement in the exam and they will ask you to prepare it based on what the accrual basis. Okay, if you adopt the accrual basis, then you have to prepare your financial statement taking into consideration certain concepts. What are those concepts? You have the accrual basis concept itself, which says that items should be recognized as soon as what they occurred, not when cash or cash equivalent is being received or is being paid for them. And we are also going to prepare our report based on what we call the going concern. We are also going to be taking into consideration the going concern assumption when we are preparing our financial statement. And that is why we have closing balance and opening balances. Okay. And one of the concepts is also when should we put asset in our books? When should a company recognize an asset in their books? When should a company recognize an obligation in their books? These are some of the concepts or some of the issues that underpin the general purpose financial reporting by public sector entities. Okay, so it means that if you are a public sector entity that you are using cash basis, are you going to be applying the principles of conceptual framework based on what we are seeing here? If the public sector entity is using cash basis of accounting, are they going to be using the issues about the conceptual framework? Are they going to be using more of the guidelines under the conceptual framework? Please, the question is for us, are they going to be using the guidelines, the concept of the conceptual framework? If they are using cash basis? No? Someone say no. Why? Under cash basis, do we have anything called assets? Under cash basis, do you have anything called assets? No. Okay. So for this one, there will not be, if you are using cash basis, there will not be any issue of liability, assets, and those things. So if you are using the cash basis, then it means that the conceptual framework will not be applicable to you, because whenever we purchase assets, we write all of them off in the year that they were purchased. So we don't have anything like assets or anything like liability. Okay, so that is it. Okay, so the board will apply this concept in developing international financial reporting standards and also recommended practice guidelines applicable to the preparation and presentation of the general purpose financial statements. All right, so let's come to the authority. Let's come to the authority. What is the power? What is the authority of the conceptual framework? Authority of the conceptual framework. Okay, the conceptual framework. Okay, I've said that the conceptual framework, the basic reason for issuing the conceptual framework is to help the preparers of financial statement to deal with issues that are not covered by what? A specific standard. It means that when there is a transaction or an event that is covered by a specific standard, then conceptual framework will not be applicable there. Then you have to account for that particular item or transaction using the specific standard or the specific Ipsas that's applicable to that particular transaction. All right. So the authority is that the conceptual framework does not establish authoritative requirement for financial reporting by public sector entities that adopt the Ipsas, nor does it override the requirement of the Ipsas or the LPGs. Okay, authoritative requirement relating to the recognition, measurement, and presentation of transactions and other event activities that are reported in a general purpose financial reporting statement are specified in Ipsas. So what we are saying is that the conceptual framework is not there to override the application of the Ipsas. What do we mean by to override? It's not that if there is an Ipsa relating to a particular standard, we now leave the Ipsa and now use the conceptual framework. No, that is not the purpose of the conceptual framework. The conceptual framework doesn't have that power. Okay, wherever there is a specific standard relating to it, you leave the conceptual framework or you put the conceptual framework somewhere, then you apply that particular standard. The conceptual framework only comes in when there is no specific standard regulating that particular transaction or item. Okay, please, they can ask you, and we are going to pick a question where you see something like this. The conceptual framework can provide guidelines or can provide guidance in dealing with financial reporting issues not dealt with by the Ipsas or the recommended practice guidelines. In these circumstances, preparers and others can refer to and consider the applicability of the definitions, recognition criteria, measurement principles, and other concepts identified in the conceptual framework. So where there is a transaction where there is no specific Ipsas or anything relating to that particular one, then preparers of financial statements can now refer to the principles given in the conceptual framework. Okay. Please, any questions so far so good? Then I'll move on to what we call the general purpose financial reporting and the special purpose financial reports. I've said that one in the, okay, what I'll do is that we'll be taking questions as we are moving on. This is too plenty. If I want to finish all before we take a question, that will be a problem. So as we are moving on, we'll be taking questions. So we are done with the applicability and all those things of the Ipsas. Let me see my tutorial questions, see whether I have any information there concerning that. Okay. Okay, let's take it up to qualitative factors and see if we can see a question on that. All right, please, any issue before we move on? So I want to look at what we call a general purpose financial report and a special purpose financial report. Okay, so let's move on. So I've said about the general purpose financial reports. All companies, they prepare general purpose financial reports. You see the financial statement that you can just go online and download. Those are what we call the general purpose financial report because it is in the domain of everybody. It is in the domain of everybody. But if you come to special purpose, these ones are prepared for what? A specific users, a specific group of people. Or these are always prepared on request. The special purpose financial reports are always prepared on a request. Parliament will ask Ministry of Finance to give them information on acquisition of what? Assets. So the information that they will be giving to them, you see that you and I will not have access to it. So that will now be called a special purpose financial report. But situation where the Minister of Finance will issue or will publish an information on acquisition of their assets, which all of us can have access to. That is what we call the general purpose financial report. Please, they can ask you to differentiate between the two. They can ask you to differentiate between the two. So the general purpose financial reports are financial reports intended to meet the information needs of users who are who are unable to require the preparation of financial statements tailored to meet their specific informational needs. So I've explained that already. The general purpose financial reports are likely to comprise multiple reports, each responding more directly to certain aspects of the objective of financial reporting and matters including within the scope of financial reporting. So this includes what? Financial statement and their notes, financial statement unless what specified. These are, so all those things that they are saying are just something to define the points more. I've explained what we call the general purpose financial reports, and I've also explained what we call the special purpose financial reports. Are those financial reports prepared to respond to the requirement of users that have the authority to require the preparation of financial reports that disclose the information they need for their particular purpose. So I've said that Parliament can ask Minister of Finance to give them information on a particular asset. That information will be given and it will be prepared for consumption by the Parliament alone. It will not be in the news for some of us who doesn't have that power to require for or to request for that kind of financial statements. Okay, let's come to the applicability of the conceptual framework. The conceptual framework, which institutions has to use the conceptual framework? Who are the people who has to apply the conceptual framework? That is what we are saying, the applicability of the conceptual framework. The conceptual framework applies to financial reporting by public sector entities that apply Ipsas. So any public sector entity that adopts the application of Ipsas has to use the conceptual framework because there will be an issue that will not be covered by the Ipsas and they have to use the conceptual framework. Okay, therefore, it applies to general purpose financial reports of national, regional, state, provincial, and local government. It also applies to a wide range of other public sector entities, including government ministries, departments, programs, boards, commissions, agencies, public sector social security funds, trusts, and statutory authorities. All those organizations that operate as public sector entities, they have to adopt or they can use the conceptual framework, provided they are using Ipsas. So SNIT, if SNIT is using Ipsas, then they can also apply the principles of the conceptual framework. Also international governmental organizations. Okay. Let's come to objective of financial reporting in the public sector. What is the objective of financial reporting? The objective of financial reporting in the public sector is to provide useful information for accountability purpose and also decision-making purpose. So why are we preparing financial reports? Why are we preparing financial reports in the public sector? You see that in the public sector, resources are being entrusted under the care of certain people. Okay, they are using the resources of the nation. They are using the resources of the nation. So at the end of the day, you have to account for us. You have to perform the function of stewardship. You have to tell us how our resources are being utilized and what are the benefits that we are going to be getting. How do you do this? You have undertaken a lot of the transactions. You can't come and be giving these things to us one by one. No, it means that you have to summarize it in a form that if we look at this, we can know that, okay, these are the people who have performed. So the first one is for accountability purposes or for purpose of stewardship. You have to be held accountable for the resources entrusted under your care. That is why some of you will be complaining that your assemblymen or your assemblywomen are not doing well, because for the past 8 years, the people you have voted for them, they have no account for, or they have not been able to tell you guys, this is how we have used this money that you have contributed, and this is why we are. It's because they are not preparing reports. So if they should prepare reports and the report will be in the public for everyone, you will not even call them and say they are not doing anything like accountability. because you have the report on them. You can just go and download it and look at it. That is why you are going to be complaining. These people, they are not doing well. So if there should be a report or if there should be a statement that will be published about them, you will not be complaining. The only complaint that you can do is that they are not doing well. But here is the case, there is nothing to see whether they are doing well or they are not doing well. Okay, so the first one is for accountability purposes. The next one is for what? Decision making. So let's now come. They have given us the statement. We now look at which of these sectors is doing well. So if this place is doing well, like maybe they have now given the information, we have realized that, okay, the educational sector is doing well. So it means that we have to dedicate a lot of resources to that area. Okay, the ministry of youth and those things, they are not doing well. So what do we have to do? We have to be very careful of any investment that we are going to be undertaking there. So those are for decision-making process. We can also decide to sack people. Government can decide to sack people because of the report. Maybe they are not doing well and they say, okay, this person, they have to take these people away. And that is why they have been sacking the Black Star, the coaches. Though that one there is not about this one because of the bad performance, because they are going to bring reports. But this is the amount that we have spent and this is what we have achieved. So we cannot continue with you again. All right. So the objective of financial reporting in the public sector is to ensure that the two basic objectives is to ensure accountability and also to provide information for what? Decision making what? Purposes. Okay, there can be other objectives, but the basic two is to provide useful information for accountability purposes and also for decision making what? Purposes. All right. Please, any question before I move on to what we call the people that the financial statements are being prepared for? Who are the people that use the financial statement for decision making, which we call the users of what? The general purpose financial reports. The general purpose financial reports. Please, any question before I move on to the users of general purpose financial reports? The general purpose financial reports. All right. Please, any question? Please, any question?
Sir.
Yes, please.
Yeah, about the general purpose financial statement reports.
Yeah.
Is it financial institution that prepares it, or any other sector? Like you mentioned, either the assembly, you mentioned assemblyman or assemblywoman.
No, any financial statement that is prepared for the consumption by the public is what we call a general purpose financial report.
So it doesn't necessarily mean that it will entails financial details, or
it depends on the operations of the institution.
Okay.
Okay, so you can see that if you take bank right now, they are going to be having a lot of items in the statements. Okay, but if you look at the issues with maybe schools, the schools to see the financial statement that they are going to be preparing, it will have certain items that will not be in the financial statement for the banks. So any financial statement that is being prepared for the public consumption is what we call the general purpose financial report. It is for everybody.
Okay.
All right. All right.
Thank you.
All right. So any other question? So that we move on. So Zinagafi, I hope you're okay.
Yes, I'm very much okay.
Okay. All right. Thank you. All right. So let's come to the users of the financial reports. Users of the financial reports. Okay. So the users, the conceptual framework has divided the users into three. And sometimes you see that all of them they are talking about the same thing. You find this user over here and still find this one so over here. The first one, they are saying that resource providers. They are saying that resource what? Providers and their representatives. So if you talk about resource providers, so the resource providers, if you go to the private sector, they are the what? The owners of the company. Or maybe we have the NGOs that normally donate to entities. So we can also classify them. Any entity that provides resources or that gives a resource to a particular institution to operate, we say that person is a resource provider. But if you come to the public sector, who are the resource providers over here? We, the citizens or the taxpayers, because it is our tax money. That is what that's what they are using to operate or to finance the operations of the public sector entities. All right. So we have the taxpayers or the citizens, we have the donors, we have the creditors, we have the investors, and we also have the MPs. We also have the MPs. So those who provide or those who give out resources to public sector entities to operate, we call them resource providers. Okay. We also call some people service recipients. So those who receive the benefits, who are those that receive the service? So if you go to the hospital right now, who are the service recipients? Is the patients. Is the people that normally come to the hospital for treatment. They are the service recipients. If you go to this one, road and transport, this one, who are the service recipients? Is the citizens, people that use the road. If you go to the education sector right now, who are those people who are the service recipients? Is the students, because they receive the service directly from the teachers. So the service recipient, we can still talk about the citizens. We can also talk about non-citizens. We have Nigerians over here who are using our water, our electricity, and all those things. They are benefiting from a lot of things. And we can also have the bilateral or the multilateral donor agencies. Okay. Then we have other users, people that we cannot classify as resource providers or service recipients. We also have other users who can be government statisticians, analysts, the media, financial advisor, the public interest, and the lobby groups. There can be some people, they don't receive the service, they don't provide resources, they are just there. So we classify them as what? The other users. The other users. So we can have some people who, like, they'll just be in the house, they don't go anywhere, they don't go to hospital, they don't go to school. They don't even provide resources. So they are neither service providers nor what? They are neither resource providers nor what? Service recipients. So they will be classified as what? As the other users. Or we have maybe some people, the financial advisors, they are from Togo. They don't receive any benefit. They will just be there and advise the government. They don't provide service. They only give an advice. Okay, so that is it. The framework regards the resource providers and their representative, the service recipient and their representative as well, the primary users of what? General purpose of what? Financial statements. They are the primary users of the general purpose financial reporting. So the first two, these two are seen as what? The primary users. So the question can ask you, who are primary users of what? Of general purpose financial reporting. Primary users are either the resource providers and their representative, or service recipients and their representative, or both. You are good to go. You are good to go. You don't have to struggle. All right. So that is it about that one. Then let's count to these people. Let's count to them one by one, and why, what information, and what do they need the information to do. Okay, so we look at the users and what type of information that they need and what do they need the information for. Okay, so let's come to informational needs of service providers and resource providers. Okay, for accountability and decision-making purposes, service recipients and service providers will need information that support the assessment of such matters as. So the question can ask you, mention 5 assessments that users or primary users of financial statement can make out of the general purpose financial reports. If I ask you that question, you should state 5 assessments that the primary users of what? General purpose financial reports can make out of what? The financial reports. And these are the things that you are going to be saying. The first one is that we want to measure the performance of the entity. We want to measure the performance of the entity. So the first thing is, if you take a financial statement of any company, what is the first thing that most of us will look at? We look at the profits. So these people, are they doing well? We look at the profits. So we first of all want to know the performance of the entity during the reporting period. For example, we want to see whether the entity was able to meet its service delivery and other operating and financial objectives. So we are saying that we want to produce 10,000 drugs for this year. What we have to do is that, was the 10,000 drugs produced? That is the first thing that we are going to look at. Has the target been achieved? Has the target been achieved? That is the first thing that we are going to be looking at. All right. The next one is, was the entity able to manage the resources that it is responsible for? Okay. You see that some in the government sector. So let's be talking in the government sector. You see, look at this one. If you are coming from Accra, there's a project there. There's a housing project there. What is the name of that project? If you are coming from Accra to, what is the name of that place? Oh, like Dawenya area there. There's a project.
Sagoleme.
Okay. So that project was undertaken by who?
President John Mahama.
Okay. But now it's supposed to be what? So you consider in the government sector, we call something expendability concept, where if the current government is undertaking a project that maybe in the next election, he was not able to win the election again, then we have to, that particular thing will now be passed on to the current government now, and will take care of that particular one. So you consider that particular project has been passed to what? The current government. But are they able to what? Manage it very well? Are they able to manage it very well? No.
No.
The project has been there. And in their reports, all this handing over, they are going to put it there. So we are going to be looking at whether they are able to manage the resources that they are responsible for. Because the housing project has been given to them. Were they able to manage it very well? The money allocated to them, were they able to manage it very well? The asset that was left to them, the asset that they have, were they able to manage it very well? And also, we also look at complying with relevant budgetary, legislative, and other authority relating to what? Raising and the use of resources. How was the resource being raised? Are they using their own ways of raising the resources? Or they are using guidelines, or they are using principles that are being set by law, or are being approved by parliament or something. Okay, so you can see that whenever government want to raise finances, they will now send a bill to parliament for approval. So if you look at the e-levy, although sometimes it is illegal, but since parliament is approving, it means that it is now a law. It is now being established as a law. So we can't do anything about it. So in terms of raising finances, the Minister of Finance cannot bypass parliament and say that he is going to be negotiating with the MF. No, they can't do that. Because the means that you are using, is it required by law? What is stated in the law? If you want to raise finance, what do you have to do? You have to pass the appropriate means and ways to be able to get that. So we also have to look at whether the company is complying with what relevant budgetary, legislative, and other issues. All right, that is about the performance. Or you can just say to measure the performance of the entity. That is all. Another one is we also want to look at the financial position of the entity in terms of liquidity. So we also have to determine the liquidity, or we also have to make assessment of the liquidity position and solvency position of the entity. For example, ability to meet current obligations and solvency. For example, ability to meet obligations over the long term of the entity. So what is their financial position? Does the entity have enough cash to be able to meet their short-term obligations, which we call the current what? Liabilities. Do they have enough assets in terms of non-current assets, which can be disposed to what? To take care of what? The long-term liabilities. We also have to know the financial position of the entity. So the first two assessments, which is the basic one, is the performance and also the financial position of the entity. Okay. Another one is also we want to look at the sustainability of the entity service delivery and other operations over the long term. So the issue now is what is the service that the entities, the sector is giving? Okay, can they be able to sustain this particular service for long? Let's come to the health center. Okay, the health center, what are the people that we need for the health service to continue? What are the people that we need? What are the basic people that we need for the sustainability of the health service? What are the people that we need? What are the people that we need for the sustainability of the health service? Okay. Okay, we need the nurses, and we also need what? What are the people that we need again? Okay, and the DR. Okay, so what are you going to see? Okay, what are you going to see? What are the things that you will see before you conclude that, oh no, for the administration officers, there, we can manage them. Okay, because those people, the work that they are doing over there is not directly related to what? To the service that the health center is giving. Their own is administrative work. But we are talking about those who involved in the service delivery itself. Okay, if you take the financial statement of what? Of a health center, what are the things that you are going to see before you conclude that these people in the next 2 years, they might be out of business, or they might not be able to provide what? Services to the public? What are the things that you are going to see? What are the things that will inform you about the people being able to be in existence for a long or not be in existence for long? Okay, what are the things that you're going to see? If you look at a health center, okay, okay, so someone is talking about numerical strength of health workers. Okay, so you can also look at the number of what workers that they have, the number of nurses that they have. Okay, okay, that is also a factor. If they're having a lot of people, and also they are if you're having a lot of people and they are skillful, they have the experience and they have the expertise, we can say that okay, these people are going to be these people are going to be, or the company will be able to provide services for the long term. Another one is also the machines that they are using. The machines, what is the machines that they have? Are they up-to-date machines? Are they new machines? If they are using old machines, you can say that no, these people, based on the machines that they have, most of them, their machines are obsolete. So for the next 2 years, they cannot be able to do it. So we look at the number of people that they have and also the machines, the working tools that they have. We can also look at that and see whether they are able to continue for the foreseeable future or something like that. And we can also look at their financial health too. If they are making profit for the past 2 years, it is likely that this board might not be able to fund their operations. We also have to look at the capacity of the entity to continue to fund its operations to meet its operational objective in the future. So this one is talking about financial capacity. Do they have the money to pay the salary of the workers every year? Do we have any institution? Do you have any institution that was set by government but collapsed? Was there any institution like that? Yes. What is the name of this one? NAPCO. Do we still have NAPCO?
No.
Okay, so you can see that they don't have the financial capacity to what? To fund the what? The objective or
NAPCO, the secretariat is still running, but Kufuor's presidential special initiative, the first one,
yeah,
that one collapsed.
Okay, why? What is the cause?
I don't know, mainly I think when they started, that was when they were planting cassava to produce starch and coal, and there was the change of government in 2009, and the new government didn't continue.
Okay, I'm talking about.
But NAPCO, I know the secretariat is still running.
Okay, but the workers, the people who are working,
they've not been paid.
So
they've not been paid. So
okay. So the policy is not that effective again, isn't it?
No, it's not effective.
Okay. All right. So you can also look at the financial capacity of the entity and see whether they can be able to fund their operation for the future, looking at their financial position. So you can take their cash flow position and see whether they have enough cash to be able to finance their operation for the foreseeable future. So these are some of the assessments that the primary user can make out of the financial statements. All right. Let's now look at these specific users and their.
Sir.
Yes, please.
Yes, please, a quick question on what you just said. So, in a situation where, we have some of the institutions, looking at the financial capabilities, they themselves, they are not in existence to be able to raise revenue.
Okay.
So, in other words, they are just an spending organization.
Okay.
So, in other words, they just draw the revenue from some place and just come and expend it. So we are looking at going concern long-term financial capability. So in a situation where, since the institution itself is not able to sustain itself, in other words, just a non-profit organization, one way or the other, will you still consider this as something that you don't have the financial capability, blah blah blah, like what you just said? I don't know whether you are getting my point.
Yeah, I've gotten your point. Okay, for this one. For this type of organization, their existence depends on where they are getting the money from, isn't it?
So they rely on some sources. So in a situation where that source is collapsed,
okay, it means that they
automatically
they also collapse.
It affects the organization. If you are not careful, you can also conclude and say, "Oh, ASMSC couldn't manage it well." I mean,
okay, if the collapse is as a result of mismanagement or misappropriation of funds, then we can point out to this person as not being the good manager.
Perfect.
Okay. But if these particular issues depend on subventions, they are not permitted to have IGF, or they can't generate revenue on their own. They depend solely on government. Then their existence depends on the source that they are getting the money from. So if those people are not having money,
great,
they cannot also not finance their operations. So as far as the money can be coming in and they will be financing their operations, we can say that they have the capacity to operate.
Great.
Okay.
Great. That's fine.
So,
thank you.
All right. So we have the specific primary users and their information need. So the first one, please, they can ask you this in the exam. I'm saying that the conceptual framework is 10 marks. is 10 marks. But there's a question that they have been asking now. We are going to look at it. There's a very popular question that they will be asking now. They have been asking now, where they will give you situations and will be asking you which of the fundamental, which of the qualitative characteristics is absent or will be affected in this particular situation. We are going to look at those ones and we see. Please, we have done 10 marks Wednesday. We are coming to do 10 marks again. God willing, if you are not able to finish, we send it to Wednesday again. Please, let's go there. And one thing about public sector is that don't always be thinking that you want to quote what they are saying, or you want to rely on a book knowledge to answer the question. Sometimes the question that they're asking you, you think you take your mind back to the books, you cannot find anything. But you just have to understand it in your own ways and relate it to maybe practical situation and be able to write something. Okay. But there are some of them there, whether you go to heaven and come back, you have to produce the book answers, especially the questions that will be asked relating to the Public Financial Management Act. Those ones that you have to put them like that from that place. All right. Let's come to the primary users and their informational needs. The first one is the citizens. With the citizens, what are the things that we are going to be looking at? What will be the assessment that we'll be making from the financial statement? Whenever we pick a statement of any public sector entity, what are the assessments that we'll be making, or what are the assessments that we'll be using those information for? All right. Okay, okay, let's now take the financial statement of the health sector. What are the things? What are we going to be assessing, or what are we going to be assessing using the information? Or why do we even need the information for? What do we need the information for? As a citizen, what is the first thing that you'll be using the information for? Please, it is there. The first one is to assess accountability of the government, or whoever is being put in charge to manage the public resources. We want to know how the resources have been utilized. Okay, we want to know how the resources have been utilized. The first one is to assess service cost, information. So right now, if you are taking the financial information of the health sector, what you are going to be looking at is that, okay, how much are they charging right now? How much are they charging right now? So after looking at whether, okay, these people, okay, they have given them this amount of money, how was the amount spent? That is the purpose of accountability. The second one is, oh, if you want to go to hospital right now, how much are they charging? How much are they charging? If you want to go to the hospital right now, how much are they charging? Okay, so sometimes someone will go to somewhere, the person will come back, maybe especially TNT. The person will say, oh, Charlie, where did you go to? Oh, I went to Kumasi. Oh, how much did they take? That is a question that we normally be asking people, all right, to assess what? Service cost information. Yeah, I saw a hand up. Yeah, Senior. Senior Isaka.
Good afternoon, sir.
Yeah, Senior.
Yeah, I was looking for the assess accountability of the government. I was thinking that maybe you should look at the budget allocated for health facilities in terms of how many hospitals were they able to build for a particular period. We know the accounts is for a period.
Okay. Okay.
That was what I was looking at.
Okay, that is your explanation depends on what you are looking at. Okay, someone might be looking at, you are getting information from the Minister of Finance. So what are the things that you are going to be looking at? Okay, so you are taking your definition from the perspective of the central government. So someone can say his assessment will be based on the MP, the performance of his or her MP. Are you okay? So what are the funds given to the MP? And what are the things that he or she has done? Are you okay? The government doesn't mean it should be the person in power. Anybody that is being entrusted with public resources, we can assess their performance. Are you okay? So your own tool is not bad. Anybody can take it from the perspective of any person that is their focus. So now I hope you're okay. Sina Isaka, I hope you are okay with that. All right, thank you. All right. So let's come to Parliament. Okay. Parliament is also one of the primary users of the general purpose financial reports. Okay. What would the Parliament be doing with the financial reports? Okay. The first one is to assess compliance with legally adopted budget and other financial rules. So they will take the budget from the Minister of Finance and they will be asking them questions. Why did you say you are going to spend 10,000 Ghana cedis? You end up spending 20,000 Ghana cedis. What were the rules stated in the budget? Especially if you come to the issues with the environment. Okay, you cannot spend more than this. That is what the law says. Why are you spending more than this? So they will try to assess the compliance with the issues, things that they have agreed on at Parliament. And even all of those things or some of those things are being breached. What is your justification? So they want to assess compliance with the budget. And that is what we do. They do the media review. They do the media review with the Minister of Finance. If public funds are being given to you, they are given to you for a purpose. Were these funds used for the purpose that they have been given to you, then they will try to look at that. And one of the committee that is going to help Parliament to do that is the Public Accounts Committee. Okay. The second one is also to determine the financial performance of government entities. Okay. So the Auditor General is going to submit a report to them. And the report, what is the report? The report will include audited financial statements. So they are going to be having the audit opinion together with the financial statements. So they will look at the report and the financial statement. Then they will see how the company, the entity, I'm saying company, the entity has done well or the entity performed. So they will also measure the financial performance of government entities. They also measure the performance of government entities through the audit report submitted to them by the Auditor General. Auditor General is going to audit all the government institutions. So the report will be compiled and will be given to them, all right, to assess accountability and transparency of government entities. That is why they are going to meet the Public Account Committee. So the Public Account Committee, you are coming to explain to the people how this money has been used and how this money was actually not used for the purpose that it was being given out for. All right. So that is on the side of the Parliament. Okay. So they can ask you to name these people, at least 3 of them, and explain their informational needs. Please, you should not hesitate to do that. You should not find it difficult. Let's come to the lenders. So the lenders, people that are going to give financial assistance to the government entities. Okay, the first one is to assess compliance with debt covenants and conditions. So you see that sometimes, look at this one. There was a time that the Mahama government went for a certain loan and there was something on employment. I don't know whether you can remember. There was embargo on employment or something. Which year is that? Which year was that? There was a year that they went for this MF something and the agreement was that they should reduce the employment in the what? In the government sector so that they can be able to
2015.
Okay, 2015. So those are the things that
Yeah.
we're talking about, the debt covenant and also the conditions. So if you are given that, okay, we are going to give you this money, and in a year you can only employ 5,000 employees, you don't have to go and employ more than what? More than 5,000 what? Citizens. So they have to assess whether there's a compliance with debt covenant and conditions. So have you people been complying with what debt covenant and conditions? They will look at that and see whether they should give you the financial assistance that you want or they should not. Okay, another one is also to determine the financial condition of government as to assess its credit worthiness. So this will be determined from the what? From the consolidated fund. So if you prepare the account for the central government, they are going to be looking at the results that we have. The results that we have and the what? The existing debts that we have. So looking at the existing debts, do we have the capacity? Does the country have the capacity to what? To finance the additional loan that they are going to be taking? They will look at this and they will decide not to give you the financial assistance. So they also have to assess the compliance with debt covenant and conditions, and also to know the financial condition of government so as to assess its credit worthiness. Okay. We also have what we call the donor agencies. The donor agencies to determine accountability for the use of donor funds and support. So we also have one that we call there's one popular donor agency from the US. They have been helping the educational setup, educational service, Ghana Educational Service. They have been helping them with those things. Okay. There was a time that they brought mosquito nets. There was a time that they brought a mosquito net. So you are going to prepare a report saying that this is how the mosquito net has been distributed. So they will look at the report. They also look at their report because they are interested in the money given to you. How was the money used? Was the money used for the purpose? So we have given you mosquito net for this number of citizens. Yes. How was the distribution done? Most of the time, some of these people, they will take the mosquito net and go and sell it. And they will now come and produce what? Magical figures for what? For the people. So they can do follow-up, call the people, maybe the number, you indicated a number there, they can try to find out whether this, so they are much interested in how their funds are being used. We are donating for the construction of what? The road from Accra to Kumasi. So we want to know whether the money has been used for that purpose. So if you are giving the statement, they will be looking at, were there any road constructed from Accra to Kumasi? So if we give you the amount that use it for this one, and you are using the amount for what? From Kumasi to Takoradi, it means that next time they cannot give you that amount again because you are not able to what? To comply with what they are asking you, to use the money for. Okay. To determine whether the terms and conditions upon which the grants were made are being okay. I've used this one in the explanation of the other ones already. So Kumasi to Accra, you are now using Accra to what? To Takoradi or something like that. Let's come to the investors. The investors. Okay, so the investors, what are they interested in? They are interested in whether the government will be able to provide the required return on their investment. That is the informational need. Because they are coming to invest. What is our required rate of return? Will government be able? Do they have the capability? Do they have the capacity? Do they have what it takes to give us a return that we want? That is what they will be looking for. All right. So let's look at information provided in the general purpose financial report. These are some of the information that you'll be seeing. We have the financial position information. We have the financial performance information. We have the cash flow information. We have the budget information and compliance with legislation. We have the service delivery achievements. We have the prospective financial and non-financial information. And we also have the explanatory information. Okay. Please, before we move on to the qualitative characteristics, let's come to the issue with, let me see whether I can have plenty things again. Let's see, 20 things again. Okay, let's take question 2. So let's take some questions on what we have learned so far before we move on. Question 2, who is reading for us?
So let me read.
All right, so now.
Financial reporting is a means to an end, which is to provide information to service recipient and resource providers for accountability and decision-making purposes. Therefore, understanding the information need of the service recipient and resource providers is critical to useful financial reporting. Discuss 4 main assessments that the primary users will need information in the general purpose financial report to make about public sector entities.
All right, please, did we look at this particular, did we look at something like this? Right now, did we look at something like this? Did we look at something like this?
Yes, sir. I think we look at the primary users of the general purpose financial reporting.
Okay. So what did we say that the assessment, when primary users need financial information, what are the assessment that they can make out of the general purpose financial reports? We talk about something like that. What and what did we say?
I think it will influence their decision making.
Okay. Yes. Okay. So let's take it. They say assessments. Discuss 4 main assessments that the primary user will need information in the general purpose financial report to make about public sector entity. So if you take the financial report, the information contained over there, what assessments can you make out of those financial information about the entity's financial report that you are taking? Assessment. If you take the information about maybe the health sector, you have taken their financial report. What are the assessment that you can make out of that report? The assessment should be about them. What are the assessment that you can make about them, taking the report that you have into consideration? Okay. So yeah.
So their ability to sustain.
Okay. The ability to sustain. Okay, that is nice. That is one. Okay. Okay, one is liquidity and solvency position of the entity. Okay, also performance of the entity. They also their financial capacity to be able to fund their operation into the future. Also their physical capacity to also operate to the future and all those things. But the financial performance and then the financial position is very important before you bring issues with what the capacity, the operational capacity, the sustainability of their service delivery and the other ones. All right. And also the legal compliance. Okay, that is nice. So those are the things that they are asking there. All right. Let's come to another question. Okay, we will talk about this one, question 3. Let's finish with the qualitative characteristics. Then we come and talk about Okay, let's come here. Question 4. Question 4. Okay, let me take it. According to the conceptual framework for general purpose financial reporting for public sector entities issued by the IPSASB, the general purpose financial reports of public sector entities are developed primarily to respond to the informational needs of the primary users who do not possess the authority to require a public sector entity to disclose the information they need for accountability and decision-making purposes. It adds that the objective of financial reporting are therefore determined by reference to the users of what? The general purpose financial reports and their informational needs required in relation to the conceptual framework. Which category of users is regarded as primary users of the general purpose financial reports of public sector entities? Okay, which category of users are regarded as primary users? We have looked at that. Okay, so we have the service. It's not service providers, it's service recipients and their representatives. Okay, and so we have the service recipients and their representatives. The second one is what? Resource providers and their what? And their representatives. Okay. Yes, now Mike, all of these people are being classified as resource providers and their representative, or service recipients and their representative. Those are the two primary users that we have. Okay, let's make reference to that. Where is that? Okay, let's come here. The conceptual framework regards the resource providers and their representative and the service recipients and their representative as primary users of what? This one. This is the place here. So you can see that it's only this place that they have examined for 4 marks or 3 marks. All right. So let's move on to another issue. Let me see. Okay, let me see here. Okay. When preparing financial report for the consolidated fund of government, identify 3 primary users and their informational needs you will endeavor to what? To meet. So let's mention them. The 3 primary users and their informational needs. The first person is what? The first category is what? Or the first person or the first user is what? Okay, is the citizens. So what is their informational need? Okay, accountability, to assess the accountability, and also to accountability and performance, also to determine service cost information. Okay, what was the second user will be what?
Government statistician and analyst.
Okay, what is their information need?
To give statistics of information.
Okay, that is also fine, but the main you see, these people are going to give advice or they are going to give recommendations to government, isn't it?
Yeah.
So you can just say that they are going to confirm whether their recommendation has been implemented. So they can say, okay, they check the implementation of their recommendations. Okay, so The other one will be Parliament. They want to ensure compliance with legally approved budget. They also want to measure the financial performance of the public sector entities, and also to ensure accountability for public funds or resources. You can also have the lenders, the donor agencies, and all those things. Okay, so it's okay. At least these things will stick in our head. Let's move on to the qualitative characteristics. Qualitative characteristics. All right. Please, let's pay attention to this side. They are now setting the question based on the qualitative characteristics. They will not ask you to state them. They will now give you situations. They will give you situations, and they will now ask you which of the qualitative characteristics are being, or you should talk about, they will give you a situation and say which of the qualitative characteristics are absent or they are present or something. They will be asking you questions like that. Okay, so we are talking about general purpose financial reports. The general purpose financial report is just like a normal financial statement for any entity. So we need the financial information for certain reasons. How does a company make sure that these reasons that we need the financial information for are being achieved? It means that the financial information should have certain characteristics or certain attributes. Should have certain characteristics or certain attributes. And these characteristics has been divided into two. We have the fundamental ones, and we also have the enhancing one. Okay, so these characteristics, which all of us we are aware of, we have what we call the relevance, the faithful representation, we have the understandability, we have the timeliness, we have the comparability, and we also have what we call the verifiability. Okay, we are going to take them one by one. What do we mean by a financial information being relevant? What do you mean by financial information being relevant? Okay, if you need information, okay, me, I'm a sports person, so I normally give example relating to betting. Okay. Right now, there will be a Champions League match between Barcelona and Paris Saint-Germain on Tuesday. Okay, so you want to bet, you want to bet on maybe the match. Okay, so right now you ask someone to give you all the information concerning matches, previous matches between Barcelona and PSG. And the person have given you information on matches between Barcelona and Arsenal. The information given to you, is it relevant for the purpose that you need it for? The information given to you, is it relevant? No. Why is it not relevant? Why is the information not relevant? Why is the information not relevant? Because it's about what you ask or where your interest is. Okay, so the information given to you cannot help you to make accurate predictions, cannot help you to make accurate judgment on whatever decision that you want to undertake. So the information given to you will not serve the purpose that it is needed for. You need the information for different decisions, and they are giving a different information. So we say that information is relevant if it is capable of making a difference in achieving the objective of financial reporting. So you are a reporting entity, and Parliament is asking you for budget information. Okay, they are asking you for budget information to determine whether the budget has been adhered to or not. Now you are giving them information on statement of performance. The information given to them cannot be or cannot help them to determine whether the budget has been complied with, or to determine whatever they want to do, because you are giving the wrong information to them. Okay, so we say that information is relevant if it is able to make a difference in achieving the objective of financial reporting. Financial and non-financial information is capable of making a difference when it has complementary value. What do you mean by complementary value? We can be able to confirm that, okay, with the information, we can be able to confirm, oh, okay, this is the reason why this thing has happened in the last 2 years. And this is the reason why this has happened in the last month. This is the reason why this thing is like this. We want the information that can help us to confirm certain what happenings. Or the information should also have a predictive value. Predictive means that we can use the information to predict what happened in the past, what happened in the present, and what will happen in the future. So a relevant information should have what we call the complementary value and also what we call the predictive value, or both. All right, let's come to what we call faithful representation. The word itself, faithful representation. What do we mean by faithful representation? Faithful representation. Faithful representation. The word faithful and representation. All right, what do we mean by faithful representation, sinners? Faithful representation. Yes, Sina Isaka, faithful representation. Okay, should not carry the misleading facts. Yes, now Mike. The Sina Isaka, the mic is
Okay.
yeah.
So faithful representation will mean whatever gains or losses that will be whatever figures, not gains, whatever figures that are recognized or present on the financial statement should reflect the times. So should be faithful to the. So for instance, if we are getting more productivity because, for instance, COVID is in or something, you shouldn't say it's because of your prudent policies or anything. You should be faithful to the circumstance leading to the productivity or something. That's how I understand it.
Okay, thank you, Sina. Thank you, Sina. Thank you, Sina. Okay, thank you, Sina. All right, Sina Isaka, your hand was up, or is the old one? Sina Isaka Aliu, your hand is up, or is the old one?
Yeah, it's the old one, please. It's the old one.
All right.
Yeah.
All right. Okay. So faithful representation, I've seen a lot of things in the chat. Everybody is saying the right thing. The faithful representation is that the information should be presented the way it is. No issue of bias, no issue of undue influence, and the information should be complete. Don't hold on to some of the information and put some of them over there. Okay, if you spend 10,000 on a particular expense, don't say that because the budget is saying that we should spend only 7,000, so we are going to report only 7,000 and what, hold on to the 3,000. No, it should be free. It should be complete, free from error, and it should also be neutral. So complete means that necessary disclosure should be given about whatever the people need to know about the information to help them make an informed decision. You should be able to what? Give disclosures on all those things. Don't hold on to other information. Free from error is that the accuracy level, we can't say that we can prepare something that will be 100% accurate, but the accuracy level to be close to maybe 90%, because the inaccuracy should not be material. Let me put it like that. The inaccuracy should not be material. Material means that it is going to affect the economic decisions that those people are going to be making. So maybe if you are doing your calculation, you have a difference of 5 Ghana cedis. 5 Ghana cedis is not anything. It's not material. So there is a difference of 5 Ghana cedis on certain figure. You can say the figure is not complete, but that case of incompleteness cannot affect anything because the amount involved is immaterial. The free from error means that there should not be any omission, complete omission. There should not be any issue of understatement. There should not be anything that is going to be classified as an error. Should not be that case. You should not purchase an asset and you are using accrual basis and you are writing the asset no, that is an error of what? That is an error of principle. You are wrongly classifying the item. So if you're using accrual concept, whenever you purchase an asset, the asset should be capitalized. But if you are expensing the asset that is what? That is an error. And that has to do with what? Faithful representation. So if you talk about faithful representation, we are saying that the information should be complete, should be neutral, and should be free from what? Error. That is what we mean by the faithful representation. Let's come to other issues with what? Other qualitative, which is understandability. Understandability. What do you mean by the understandability, the principle of understandability? Okay, understandability. Yes. Understandability. What do you mean by understandability? Yeah, Mike.
So the information on the financial statement, including all disclosures made, should make it easy for the user to understand and based on that, take an informed decision.
Okay, that's nice. Nice. Okay, does it mean that the format for representation also account for understandability?
Yes, I believe so.
Okay, that is nice. So the format that you are going to be using and the information that you are going to be providing there. Okay, every information in the footnote, if you can be able to provide every information in the financial statement, if you can be able to provide a footnote to it, if you can be able to disclose it very well, that if we look at revenue, tax revenue, 10,000, how was the 10,000 being arrived at? We can now go to, oh, this is the component of the tax revenue, or this is what we call the tax revenue. Or this is what we call tax revenue. So the disclosure is going to make people understand whatever is presented over there. So understandability has to do with the quality of information that enables users to comprehend its meaning. They don't have to present the information. You see, I don't know whether you have seen financial statement prepared by Japan Motors and those things before. Have you seen their financial statement before? Okay. What they normally do is that they present the financial statement in 2 languages. Okay, those companies, they prepare it in 2 languages. They do it in their own language, and they also do it in the English language. Why are they doing this? For people to what? Is to accomplish the principle of understandability. Because I'm in Ghana, I'm not Japanese, and you are presenting the financial information in your language. How will I be able to understand what you're talking about? So the languages that we are going to be using should also be, the English should be brief and concise. You are in Ghana, you are presenting your financial statement in French, in Latin. Are you going to read the things? Are you the only one who is going to use the financial information? No. So it should be prepared in a language and also in the format. The format also matters. The format also matters. And that is the reason why if you are doing workings for PPE, we normally prepare a PPE schedule to make it very simple. Okay, so the formats and maybe the models that you are going to be using, they should be understandable, they should be simplified. All right, that is what we mean by understandability. So understandability, the question can say that the company has added footnotes, or the company has added, or the company has disclosed certain items in the financial statement. Which of the characteristics is being adhered to over here? You talk about understandability, you explain it why you are saying it's an understandability. All right. Another one is what we call the timeliness. What do you mean by that? The timeliness is what? Seniors, the timeliness, the issues with timeliness. The issue with what? Timeliness.
If I may come in, it means that the financial report is required by the stakeholders for taking for decision making.
Okay.
So the financial report should be submitted to the users of the financial information to enable them take decision that is relevant to the institutions.
Okay.
Or the public to the institution, yes, or the organization. So it is time that is required by, because all financial statements, companies have to prepare, they have time that they prepare their financial statements.
Okay.
Or they prepare or publish their financial statement.
Okay.
And based on that, users of that information will use the information for decision making. So it has to be submitted on time for them to use for any information that they want to, or decision that they want to undertake.
Okay. You see, sometimes we don't like, there are some certain principles that you have to understand. You see, okay, the best way to pass the exam is to write plenty. Okay, so like all the people, or like all of us over here, we can see that from the beginning what you are saying, if you should stop there, it will be very difficult for us to understand what you are saying. But as you kept on explaining the thing, the last part has now made us to understand what you are saying. So on time, that on time. So sometimes the best way to pass the exam is to write plenty, because what you are trying to express might not be in the first 2 lines. So try to express yourself in like maybe at least 5 or 6 lines. All right, senior. That is nice. That is nice. Okay. So the issue with timeliness is that information should be provided as at when it is what? It is required, or it is needed by the what? By the users. So if the users, we are saying that Parliament is saying that we need the information within 3 months, it means that you should be able to provide that information within 3 months. It should not exceed the 3 months. So the issue of the timeliness is what? Making the information available to the users as and when it is needed. If that happens, then the information will be what? Relevant to them. So the timeliness is also a factor to ensure what? The principle or the issue of the relevance. So if I need the information within 3 months, you are giving it to me after 3 months. That information is what is irrelevant, because I cannot use it for the decision that I want to make. I've already made the decision. So I don't need that particular information again. So the timeliness has to do with having information available for users before it loses its capacity to be useful for accountability and decision making. It should be made available as at when it is needed. So sometimes they can tell you that the company has prepared their financial statements at the end of the 15 months. They have prepared their financial statements at the end of the 15 months. What qualitative characteristics is being what value or what characteristics that this particular financial statement will be losing? What characteristics that the financial statement will be losing, or the financial information will be losing? The information has been prepared at the end of 15 months. what characteristics will be losing in that situation? What characteristics? What characteristics that will be, the information will be losing in that particular regard at the end of the 15 months? Okay, that will be timeliness. Okay, basically, reporting entities are expected to what? To prepare their financial statements at the end of every reporting year, which is usually 12 months. So 15 months, that means that you are adding additional 3 months, and that information will be irrelevant to the people. Let's look at the issue of comparability. The issue of comparability. What do we mean by the financial information having what we call comparability? Comparability. Which of the policy? Is the policy of the organization? No, the company cannot be, the company is applying financial reporting standards. So they have to adopt everything for the financial reporting standards, and they also have to comply with the what? The company codes or the company acts. So every organization is required to what? Prepare financial statements for a year, unless it is required by law that all companies should prepare their financial statements at the end of 15 months. Okay. So if it is the policy of the company, you cannot choose the policy of the company over what the law is saying. All right. Okay. All right. So let's come to the comparability. 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 What do you mean by comparability? Yes, yeah.
Yeah, to follow consistency. So like it wouldn't happen that every year you have different lines of items you will be showing your financial statement. So for instance, if 2022 you showed a bill from for instance TNT. I mean, we are expecting you that 2023 you should follow the same pattern by showing TNT.
Okay.
Or travel and
okay. Why should they follow the same policy?
So that you will be consistent with the lines you are showing.
Okay, so the consistency will end up in what? Okay, we are expecting
improper.
Okay, Sina, you wanted to say something?
It will end up in improper presentation.
Okay, okay. We are expecting the consistency so that we can be able to compare the 2 years statements. Okay, so consistency is being applied to achieve what we call the comparability. So if you are able to maintain the same policy, we can be able to say that, okay, this is what is causing the difference over here, and this is what is not being right. Okay, so we normally emphasize on the consistency in order to achieve what we call the comparability. Okay, so I saw a hand up. Yes, now Dennis, your hand was up.
I wanted to add to the comparability. So the comparability characteristics like maybe the entities can compare their financial statement from the previous years. They can compare it to the current year because of that characteristics being available. So they are able to compare
Okay.
their financial statement from previous years.
Okay. That's nice. That's nice. That's nice. All right. So the comparability is the quality of information that enables users to identify similarities in and differences between two sets of what? Phenomena. What do we mean by two sets of phenomena? That is why you see companies, whenever they are preparing their report for the current year, they prepare it together with what? The recent one or the previous year's own. Why are we doing that? So that we can be able to identify or we can be able to compare the differences between what? Okay, okay, okay. Can comparability also mean actuals? It should not be accruals. Actuals being compared to budgeted as a cost control measure. Yes, please. So adding a budget information to your current statement is also to be able to compare what we are planning to do and what we have done. So adding a budget information is also a tool to ensure what? Comparability. So to ensure comparability, we normally prepare financial statement with what? With the previous years. That is why you see 2021 and 2022. We want to be able to draw a comparison between whatever is happening there. And consistency is also a tool in achieving what? Comparability. So if you're using cost model for your PPE for this year, next year you are using revaluation model, how do we be able to identify why the asset is increasing and why the asset is reducing? So you have to be able to apply the same accounting policy for a certain period of time. So comparability is just you being able to identify the similarities, the differences between two phenomena. How can you achieve this? You can prepare the financial statement with the budget information. You can prepare the financial statement in a comparison with what the previous year's own. All right. So that is all about the comparability. The last one is what we call the verifiability. Verifiability. Okay, what do we call? So they can ask you, the company has added a budget information to the statement. They want to achieve the principle of comparability. Okay, but we want to talk about verifiability. Okay, verifiability is just the users need assurance. So this assurance can be given by an independent person, or this assurance can be achieved by what? By the users themselves. How can they achieve this? We can take a calculator and try to add the figures ourselves. So we call something direct verification. So we have taken the financial statement, we have seen revenue, and we have seen expenses. So we also want to know how the gross profit was ascertained. So we can do recalculation to confirm the figures, to verify the figures ourselves. The indirect verification has to do with we trying to perform the what? The calculations using the models that we have used. So we can decide to calculate the depreciation of the other capital consumption of the asset ourselves. What model are you using? What method are you using? You are using the straight line method. What is the useful life of the asset? What is the cost? So we can take it and try to perform that particular calculation on ourselves. Okay, also to verify. Or we can get a verification through a third party. Who do we call a third party? It can be an independent auditor who will sign the financial statement. So we have seen a signature of Deloitte on a financial statement. It means that these people, they have verified this and they are telling us that this financial information included over here, they are all correct in all material effects. All right, so we can go ahead. So the verifiability is also about we trying to what? Get assurance that the figures over there are actually what happened during the year. Okay, there can be a situation where the question will say that, okay, the information provided in the financial statement, there is no supporting documents. There's no supporting document to support the information provided in the financial information. What will be the characteristics that the information will be losing over there? The information will be lacking a certain characteristics. Which of them is that? There is no receipt, There is no receipt to the information. Okay, so that would be lack of verification. There is no evidence, there is no receipt and those things. So the information okay, so that is the verifiability. And let's look at this one. Okay, what happened is that we are expecting a financial information should have all of these things, but there are some cases it will not be possible for the financial information should have all these characteristics at the same time because of certain things. Okay, so we look at the cost constraints or the constraints on financial or information included in the general purpose financial reports. The first constraint is what we call the materiality. Okay, those preparing the financial statement, they can decide to make a judgment of what is material and what is what immaterial. So maybe if you count to the health sector, 10,000 Ghana cedis, when there is an issue involving 10,000 Ghana cedis, they can ignore it. They can ignore it. And this 10,000 will not be included in the financial statement. And if there is an issue with another issue like 5,000, they can also ignore it. But they have forgotten that if you put all these small figures together, it is going to have a larger impact on the financial statement. So whenever you aggregate the issue of the materiality, it will now come or it will now become something that is going to be affecting the representation of the financial statements. So the decision between what is material and what is immaterial will also make the financial statement not to be faithfully represented, not to be verified, and also not to have other characteristics. Okay, another one is also what we call the cost-benefit analysis. The cost-benefit analysis. Sometimes the preparers of the financial statement, they will look at the amount that they will be spending to get a financial statement ready or to make sure the financial statement has all these characteristics. But looking at the benefit that it will bring in, I have to make sure that I've gotten someone to verify the financial statement. I have to make sure that I've wasted or I've employed a lot of people to handle the volume of the data so that we can be able to give the financial information on time. But if I give the financial information out, there is no benefit. There won't be any investment. So why should I waste my time making sure that the financial statement has all these things and it will not bring anything to me? So the cost benefit analysis can also make the preparers of the financial statement to ignore some of the characteristics and just ensure that they have few of them. Okay, the cost benefit analysis to the amount that you are going to be spending to get a financial statement ready and the benefit that you'll be getting from it. If the cost is higher than the benefit, they'll just overlook it. All right, that is a cost benefit analysis. Another one that we can also look at is what we call the time required. Okay, maybe you can just be there, you are not prepared, you can just be there, then they will ask you that, okay, we need this information in 2 hours time. Because of the pressure, you're not prepared. You can end up giving us what we call the inaccurate information. The pressure can also end up, the pressure on you can let you end up giving what we call a wrong information. So the time also is a factor. All right, so they can ask you the constraints on financial information. Okay, another one we also call the balance between the qualitative characteristics. Sometimes we try to trade off some of them. Okay, we can say that, okay, if an information is relevant, it means that the information is maybe comparable or understandable, or it is on time. So we can, since we are having relevance, we can decide to ignore the issue of the time and the issue of understandability. So we can try to trade some of them off. We can try to trade some of them off. That can also be an issue. All right. I don't want to get into the reporting entity. Let's take some questions on this one before we move on to what we call reporting entity, and other issues. Okay, so okay, let's look at question 7. Question 7.
Can I read?
Yes, please.
Some accountants hold the view that development of conceptual framework for general purpose financial reporting, into brackets simply the conceptual framework, in the public sector is needless and a mere information overload on the accountants. This argument is predicated on the fact that conceptual framework does not establish authoritative requirements for financial reporting by public sector entities that adopts Ipsas, nor does it override the requirement of the International Public Sector Accounting Standards, Ipsas, or the recommended practice guides. A. Required. Explain the connection between the conceptual framework on one hand and Ipsas and recommended practice guides on the other hand. B. Illustrate a practical case where conceptual framework would be useful to an accountant in the preparation and presentation of a general purpose financial reporting for his organization.
Okay, we have C.
C. Explain two constraints on information included in the general purpose financial reports.
Okay, so this is the argument, and they are saying that the argument was predicated on the fact that conceptual framework does not establish authoritative requirements for financial reporting by public sector entities that adopt the Ipsas, nor does it override the requirement of the International Public Sector Accounting Standards or the recommended practice guides. Explain the connection between the conceptual framework on one hand and the Ipsas on the other hand. What is the connection between them, and how are you going to answer this question?
Please, can you come again?
Okay, they are saying that you should explain the connection between the conceptual framework on one hand and the IFSA and the recommended practice guides on the other hand. So what is the connection? What is the connection between them? And what is the connection between conceptual framework and then the Ipsas? And how are you going to explain?
I think when you were explaining the authority of the conceptual framework, you mentioned the fact that it should not override Ipsas and then the RPGs.
Okay.
Which means that they must work in connection.
Okay.
So the conceptual framework must establish what the Ipsas and then the RPGs are saying. They have to work hand in hand.
Okay. Okay. That's fine. That's fine. That's fine. Okay. That's fine. Okay. All right. Seniors, any other view? Any other view? Yes, it's not Mike. It's not Mike.
Yeah, Well, I also think so back to what my colleague said, when you explained the authority of the conceptual framework, I think you made a point that the Ipsas or RPG does not necessarily deal with every financial reporting issue. That's where the conceptual framework comes in as a sort of guidance in dealing with issues that are not captured by Ipsas or the RPGs.
Okay. That is cool. That is also cool. That is also cool. Yeah. Any view? Any view? Okay. All right. So all that you have said is right. But to yes. So what all that you have said, they will give you marks. But the first thing is that they say the connection between the conceptual framework on one hand and the Ipsas also on the other hand. So the two of them, what is the connection between them? Okay. We learn from the rule of the conceptual framework that they provide or they establish concepts that underpin the general purpose financial reporting of entities that applies or that adopt the Ipsas, isn't it? Okay. It means that any entity that adopts Ipsas or any entity that uses the accrual basis of accounting under Ipsas has to also use the conceptual framework. So if an entity is using Ipsas and they are using accrual basis, it means that they have to also adopt the guidelines of the conceptual framework. The conceptual framework is not for entities that are not using Ipsas because the conceptual framework is issued by the board as a supplementary document to the Ipsas. So if you are adopting the Ipsas, it means that you also have to accept the conceptual framework. So any entities that uses Ipsas will also be using the conceptual framework. So what the person said that they have to work hand in hand is correct for this one. And you can also move on ahead to say that, okay, the conceptual framework is not there to overtake the requirement of Ipsas. It only comes in when a particular transaction is not covered by a specific Ipsas or a specific RPGs. All right, so you can talk about that one. But the connection is that any entity that adopts or that applies Ipsas has to accept the conceptual framework. You can't be using Ipsas without a conceptual framework because there will be a situation where you will be faced with a transaction, no Ipsas will be dealing with it, and you have to apply the principles of the conceptual framework. All right. So I hope it's clear. Okay. All right. So that is it. Let's come to illustrate the practical case where the conceptual framework will be useful to an accountant in the preparation and presentation of a general purpose financial report for his organization. Please, if they are saying that you should use a practical case, it is not like it doesn't necessarily mean that you should be using figures. No, you should just talk about situation where you will be needing the application of the conceptual framework. So please, let's give a situation. Let's give a situation. Please, where would the conceptual framework be useful to an accountant? Please, where would a conceptual framework be useful to an accountant in the public sector? Yeah, Sinyakafu.
think when the accountant is preparing financial statements.
Okay. And if you are preparing a financial statement and all the issues are covered by Ipsas, will you be using the conceptual framework?
Yeah, I think
And
so.
then-
Because,
okay.
okay.
No, please talk.
Okay, Senior Kafu.
Yes, sir.
Yeah.
I think yes, because the conceptual framework will it will help you to know if you're not making mistakes. You are applying the Ipsas very well.
Okay. 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 Nice. Nice. That is also cool. That is also cool. Okay. That is also cool.
Linus, please, I have a question.
Okay, Senior.
Okay, so you see, with the previous question and the explanation based on the conceptual framework that you said it establishes concepts that underpins reporting entities that use Ipsas, basically accruals, right?
Yes, please.
So does it mean there are some Ipsas that doesn't tackle accruals but tackles cash basis?
No, please. No.
So all Ipsas is accruals.
Yes, all Ipsas are based on accrual basis, because the time that we are using cash basis, there was nothing like depreciation and all those things. Okay, so all Ipsas
Okay, so
they are using accrual basis. Yeah.
So I asked that because when you were giving the explanation for the earlier question, you stressed on the accruals. So I was just thinking, what if, because if Ipsas takes care of all the accruals, then, or we can't assume for the examiner, we just have to state everything clear.
That you have to assume that okay, you see, the time that there were no Ipsas, the board issues what we call the cash basis of accounting. Now, whenever expenditure is paid, you should just write it off. Those were the times that no Ipsas were in existence. Okay, so they have now bring in the Ipsas, and they are now bringing in what? The accrual basis. And that is why they are even asking government entities to now move from the cash basis to accrual basis. If they are now moving to the accrual basis, then they will now be adopting what? The Ipsas into their reporting. All right, all right. So, yeah, Sinagafi, what you said, the first one was right, that any accountant that is preparing financial statements might or will be needing the conceptual framework under only one condition. It will need the conceptual framework when there is an issue which is not what covered by a specific standard. There is an issue in the financial statement that no specific standard is what is regulating that particular issue. Then the person has to make reference to the guidelines, the recognition criteria, the definition, all those things given under the conceptual framework. But situation where there's a specific standard relating to that, you don't have to use the conceptual framework. So the conceptual framework comes in when there is an issue which is not covered by a specific standard. So the practical place is that there is an issue in the financial statement which is not dealt with by a specific standard. So the accountant must use the recognition criteria, the measurement criteria, or the measurement basis to account for that particular transaction. Okay, so the practical case doesn't mean that you should quote a figure. No, you don't know what transaction that the person will be facing. Okay, Senior Dennis.
Is there any example of such situation?
That is what I'm saying, that you don't know what the person will be facing. Okay, but mostly the example that I give is what? If you come to the Ipsas 17, we are talking about property, plant, and equipment. Okay, maybe you are reporting in an NGO, but the NGO has what? Maybe the NGO, what they do is that they engage in this one. Let's say they are into hospitality. Okay, they're into hospitality, then you have now purchased what? disposable cups, and you have also purchased what? Expensive plates and also the glasses that you'll be using for the operation. You can see that if you go through all the Ipsas, none of the Ipsas will be saying that this is what? This is property, plant, and equipment. They are not specific. No, none of the Ipsas will be telling you specific that, okay, whenever you purchase disposable cups, it should be inventory or it should be this one. So you have to use the recognition criteria and all the definition of an asset given by the conceptual framework to be able to know whether the disposable cup will be classified as an asset. If it's an asset, which type of asset? Whether the expensive plate will be classified as an asset or which type of an asset. That's one part of the example. Another one is also you have a situation where you have maybe you bought items from someone. You know that the normal issue is that you either buy on credit or you buy on cash. Okay. You either buy on credit or you buy on cash. Okay. Right now, what is going to happen is that, okay, you have bought the item. Okay. The person sold the items to you. And instead of you paying the person in cash, you have now seen the person that, okay, what will happen is that we are going to give our employees to you. Since you don't have employees, you need employees. We are going to use our employees to pay for you because we are paying that particular person. So we give the person to you now and we'll be paying. Which of the Ipsas is talking about this? None of the Ipsas. But you have to account for this particular transaction because you have gotten the items. You have to put the items in your books. How do you do the corresponding entry? What are you going to be doing? So you have to fall on the what? On the guidance provided by the conceptual framework. All right, Senior Dennis, I hope you are okay.
Yeah.
Okay.
Thank you.
All right. So please, is restructuring one? I don't get it. Please, can you come again? Restructuring. Is restructuring one? No, restructuring is covered under provisions, but the provisions I don't know which standard, which IPSA that we have, but I know that for financial reporting is 37 restructuring, where a company wants to restructure. So the redundancy costs and all those things have to be, but I don't know the restructuring under the IPSA. So I have to search for that one. So provisions under IPSA. So let me get it. Provisions under IPSA. So which of the IPSAs is relating to provisions? Okay, it's IPSA 19. It's 19. So it's provisions, contingent liabilities, and that is IPSA 19. Okay, so the restructuring will be covered under the what? The 19. Okay, let's come here. Explain two constraints on information included in the general purpose financial reports. I think we just finished with that before coming to this particular question, isn't it? We finished with the constraint. So what are the constraints? Okay, what are the constraints? We look at the issue of materiality. We look at the issue of cost-benefit analysis, and we also look at the issue of what? The time. Okay, so those are the issues, and that is all. All right. So we look at the issue of this is how they are now setting the question. Question 8. Question 8. Question 8. Okay, Sinakafi, question 8. Can you take it for us?
Okay. Below are some observations made after an assessment of the general purpose financial reports prepared by a public sector entity in 2018. Not only transactions were not treated in accordance with the Ipsas, some were omitted unknowingly. And presenting the financial performance, in presenting the financial performance, position, and cash flow for the current financial year, 2018, the accountant has also provided information on the current year's budget. C. Investment amounting to 1 million Ghana cedis in short-term security. Short-term security report in the financial position lacks supporting document, even though the investment may exist. D. The financial report was dated 30th June 2019, which is an improvement over the previous years, which was signed in September 2018. Required, in line with the conceptual framework for GPFR by public sector entity, explain the qualitative characteristics of GPFR for each observation in A to B above, and explain how each of the observations affect the usefulness of the GPFRS to the users.
Okay. So these are the issues. This is how they normally set the questions on the qualitative characteristics. Okay. So let's take them one by one. They say you should explain the qualitative characteristics of the GPFR for each observation in A to what? It's supposed to be D above, and explain how each of the observations affect the usefulness of the GPFR to the users. This will go for 10 marks. Okay. So each of them is 2.5 marks. All right, the first one, not all transactions were omitted in accordance with the Ipsas. Some were omitted unknowingly. Which of the qualitative characteristics will be affected there?
Faithful representation.
Okay, it will be faithful representation. So you just have to explain the faithful representation. Okay, the faithful representation is that the information should be complete, should be free from error, and should be neutral. So there should not be any error of omission and all those things. So the omission over here is going to make the information not to be complete, and it also might affect the economic decisions that the people are going to be making. So you just have to explain the qualitative characteristics first. Then you now say why you are saying it is this one, because some of the materials, some of these ones are omitted, error of omission, and they are saying that they should be free from errors such as omission, understatement, and all those issues. So this one this omission is going to make the material should be what? Less relevant or not to be complete, and which is going to have an impact on the economic decisions that the people are going to be making. All right, let's come to the next one. In presenting the financial performance, position, and cash flow for the current financial year 2013, the accountant has also provided information for the current year's budget. What characteristics is there? Yeah, Senator Mike.
Is it relevance?
Budget information.
Comparability and effect.
Yes, that will be comparability. So you providing budget. So we can now compare the budget with the actual. We cannot compare the budget with the actual result. So it's to achieve what? Comparability. So you first explain what comparability means. Comparability is a situation where the user should be able to identify the similarities in and the difference between two different phenomena. So you can see that the budget information is a different one, and the statement itself is also a different one. So we can be able to compare our so now Mike, you were the one who asked about we adding budget to this one to be able to ensure.
Yeah.
Yeah. So it's the same thing.
So, okay, so I took it from the point of, you say in presenting the financial performance, position and cash flow for the current financial year. Okay, current. I missed that one. Okay. So I think comparability is right.
Okay, all right.
All right, thank you.
All right, so now let's go to the C. Investment amounting to 1 million in short-term security report report in the financial statement lacks or supporting document, even though the investment may exist. Which characteristic is this one? Which one is this? All right. Okay, that will be verifiability. Why are we saying that is verifiability? You can't just mention verifiability and just move on. You first of all have to explain what we call the verifiability and also say why it is a verifiability, because we have to confirm whether the investment was actually what purchased. How do we confirm it? How do we verify it? We have to look at the receipt or any document relating to any relevant document relating to to that particular investment. So that is for that. So the final one is the financial report was dated 30th June, which is an improvement over the previous year, which was signed in September 2018. What is that? Okay. What characteristics is that? Okay, timeliness, because you consider the information supposed to be available. Yes, now Dennis. Is it an old hand or is it a new one?
Yeah, please, can you take the D again?
Which one? The D?
Is that?
You say, should I take it?
Can you take the D again?
The D. Okay. The financial report was dated.
The B. Can you explain it again?
The B.
I was a little confused. The B.
Okay.
Comparability.
Okay. In presenting the financial performance.
Yeah, I'm talking about the B.
Okay. The B, you want to talk about understandability. Okay. So
I do not understand it.
Okay. In presenting the financial performance, position, cash flow for the current financial year, 2018, the accountant has also provided information on the current year's budget. Okay, so let's come here. The financial position and those ones are relating to what? This year, isn't it? Okay, before we start operating, we normally prepare a budget to project whatever cash flow, whatever performance that we are expecting, isn't it? Okay, so we have the budget at the beginning, and now the financial performance here now is the actual result. So what do? We can now compare our actual results. We can compare our actual results with what we are expecting to see why this is reducing and why this is also not reducing. In effect, we are just comparing what we are expecting with what have actually happened. So whenever our budget information is included, it's for the purpose of what? Comparison. That is why you'll be having a variance. How do you calculate the variance? It's because you are comparing the actual results with the budget. So it's to enhance or to enable the purpose of what? Comparability. All right. So we want to compare our budget with our actual results. Okay, so now Dennis, I hope you are somehow okay now. And we can.
Yeah, I'm okay.
Okay, let's come to question 9. Okay. So let's do some and leave the question will come for 10 marks. Okay, mostly it will come in this form. Okay, so let's look at question 9. Question 9 is something that we take another. Then we take another question. Question 9, a public sector entity that applies that applies the the Ipsas is currently faced with a particular financial transaction for which no Ipsa exists for dealing with the issue. The management is undecided on the choice of accounting policy to apply. Required, discuss how the matter can be dealt with by management of the entity. Please, this question is about what? This question is about what?
Framework.
Okay. It is on conceptual framework and also we call a standard. I hope you have heard about the IS8 before, accounting policies and those ones, isn't it? Okay.
Mm.
So you'll be using the two. Okay. Please, I'm not for the Ipsas. We don't really use the Ipsas in reporting. So I don't have the Ipsas. The one that I know is the Ipsas 17, which is property, plant, and equipment. The one that I know is the standards, is the accounting standards. So November before I will be familiar because they will be examining the Ipsas there. The Ipsas is just like the accounting standards. It's just the name that they change. It's the same thing. Okay, is that the same like the accounting standard requirement and everything? But just that I'm not familiar with Ipsa 12, Ipsa, those things like the way I can mention the accounting standards. Okay, but this is about conceptual framework. No Ipsa exists for dealing with the issue. So if there's no Ipsa dealing with the issue, what do? We make reference to what? To the conceptual framework. The conceptual framework will now give us guidelines on how we can what? Develop the accounting policy. So we now make a reference to the accounting policy. Accounting policy changes in an estimate and errors. Wherever there is no accounting policy, or there is no accounting, or there is no specific standard relating to that particular transaction, management must use their discretion. Management must use their discretion or their judgment in developing the accounting standards. In an attempt to develop the accounting standards, they have to make reference to what? The definition, the recognition, all those things set in the conceptual framework. So the conceptual framework will be the first guide. So if you want to set the accounting policy, you have to make reference to the accounting or the definition and recognition set by the conceptual framework. That is the first point. The second one is you also have to make reference to what? Recent accounting publications that are made by other standard setting bodies relating to this particular item. So maybe we have other standard setting bodies, like maybe the accounting standard setting body. Maybe they have published a standard right now relating to what? This particular transaction. What do we have to do? Can we make inference from what they are saying? Can we make inference from what they are saying? But even if you answer this question on the issue of conceptual framework, because the conceptual framework comes in when there is no specific Ipsa relating to a particular transaction. So you have to use the definition, the recognition criteria, the measurement basis set out in the conceptual framework to be able to develop the accounting policy. So the first point to develop the accounting policy is to make reference to the conceptual framework. So the conceptual framework will give you guidance. Or you can also use other publications, other recent publications that are made by other standard setting bodies or national standard setting bodies relating to what? This particular item. So that's how you deal with this particular issue. So if there's no specific standard relating to what? A particular transaction, and management want to develop an accounting policy. This is if they want to develop an accounting policy. But if they want to know how to deal with the issue, then they have to use the guidelines of the conceptual framework. But if they want to develop a new accounting policy, then they have to use their discretion. By using their discretion to develop the new accounting policy, they have to make reference to the definition, the measurement basis, the recognition criteria set by the conceptual framework and other publications that are made by other standard setting bodies relating to the transaction that they have. Okay, so management is undecided on the choice of accounting policy to apply. So they have to develop a new accounting policy by making reference to what the definition set by the conceptual framework and other publications made by what other standard setting bodies in the industry or in whatever they want to get that from. So explain information needs of 5 primary users of this one. You can see that we still have that particular issue over there. I want to talk about the 12. Let's talk about the question 12. Question 12.
Question 12.
Okay.
The following revelations were made about the financial reporting process of a covered entity. A. The users of the financial statements of the entity is less interested in the financial information because it does not provide information that enables the users to either confirm their expectation or make predictions.
Okay, let's stop there. Which of the qualitative characteristics are we talking about here?
Okay. Understandability.
Understandability, yeah.
Are you sure?
Okay.
It's supposed to be relevance. Confirmation.
Relevance.
Okay.
Yes. So relevance should help us to, it should have a confirmatory and predictive what value, isn't it? Okay. So if these things are not added, it means that maybe the financial statement is too lengthy and the people, they are less interested because they, even if they take it, they will not understand it. But because of the confirm and then the predictions, that is why we are using the relevance. Because, okay, naturally, if you don't understand something, you will not be interested and you're not going to waste much time on it. But why it is no understandability is the issue of what? The confirmation and also what? The predictions. Okay. Are we okay? So that's why we are having the relevance. Okay. Let's take the B.
Okay. B. Equipment purchased during the year was recognized as expense in the statement of financial performance, even though the entity applies the accrual principles.
Okay, what characteristics is there? What characteristic will be there? Yeah, Senior Dennis.
Faithful representation.
Faithful representation. You will see that this particular thing over here is an error, and it's going to make the financial statement what? Not to be faithfully represented, because the profit that you'll be showing, it will not be the actual profit, because the asset should be what? Should be capitalized and depreciated over its useful life. So you are going to be understating or overstating your profit, which will not show the actual result for the year. And this is an error. So whenever an error is made, that will be to do with a faithful what? Representation. Let's go to the C.
C. A revenue transaction of a significant value was completely omitted from the financial statements of the entity unintentionally.
Okay. Would the statement be complete?
It will not be complete.
No.
Okay.
No.
So what characteristic will be here?
Still not faithful representation.
Yes, it will still be the faithful representation. So anything that has to do with errors, anything that has to do with incompleteness or incompleteness, anything that has to do with biasness will all be under the faithful representation. So you ask yourself, because of this transaction, will I be reporting the actual effects? Will I be reporting the actual transactions or actual happenings during the year? If the answer is no, then you have issue with what? Faithful representation. Let's look at the D.
D. The financial statements showed the budget amount alongside the actual amount of the year in the statement of financial performance.
Okay. So which characteristic is that?
This is comparability.
Comparability. Okay. That's comparability. The E.
This is
E. The accountant confirmed that some records relating to expenses were done based on WhatsApp messages, online texting app from the principal spending
Comparability.
office.
Okay. So which principle is this?
Verifiability.
Okay, that would be
Verifiability.
all right. That would be verifiability. So explain how each of the transactions A to B will affect a specific qualitative characteristics of the financial statement of the entity. So you just mention them. First of all, you will explain what the relevance of those things means and why you are saying that this particular information should be relevant. You see, after you explain the characteristics, you see what they're asking you to say will not be will not be a problem again. So since you are saying that information is said to be relevant when it has a confirmatory and predictive value. Okay, in this case, the financial information given out lacks what? A predictive and what? Confirmatory value, thereby making it what? Irrelevant. That's all. What do you have to say again? No. So the equipment purchase will be a faithful representation because the equipment should be what? Faithful. You will first explain a faithful representation. It should be free from error, free from omission, and free from what? A bias or something. Okay. So equipment should be capitalized as an asset and amortized or depreciated over what? Over its useful life. So you charging your equipment as a whole amount of profit or loss will make the profit not to be the actual profit for the year. Or the error of you charging the equipment to profit or loss is going to make the information not to be what? Not to be accurate. And that is going to affect the principle of what? Faithful representation. The omission is going to make the information not to be complete because the revenue will be understated. And that is not going to be showing the true result of the entity for the year. So that is how you go about it. And what are we left to take? Let me see. We are left with. Let me see. Okay, so this one there, we don't have to waste time on them. Okay, so we look at what a reporting entity is. So we'll be starting from what reporting entity is, and some other issues. So element of financial statement, which we know most of them already. Then we look at a measurement basis, and we look at the Ipsas, the benefits and the reason, the challenges and all those things. Okay, this one then, next week within 1 hour, we can finish it. Our next topic will be accounting concepts and policies. So we'll be looking at the cash basis, the modified cash basis. We look at accrual basis and then the modified accrual basis and their advantages and disadvantages. It will also count for 10 marks. So seniors, I would like us to end it over here. And if you have any question, any recommendation, any suggestion, any complaint, you can voice it out. Then we address it or we look at it. Yeah, Sinakafi.
If you can go over the cost benefit again.
Okay. So the cost benefits is just like cost benefit analysis. Okay. If you want to go to a place, okay, you look at what is the transportation, or sometimes maybe we want to go. For me like this, if I'm in the house and I've heard that there will be a wedding somewhere and to be save yourself. Okay, I will say that okay, if I want to take car and go there, how much am I going to be spending? So if I should go out and go and buy food myself, so I would look at the transportation. How much will I be spending if I go there? How much will I be buying food in the house? So if I should spend that money and go to that particular wedding right now, the food that I'm going to eat over there, will it be enough if I should go and buy the the food at the roadside. So you look at the benefit that you'll be getting if you should go there and eat, and the benefits that you also be getting if you look at if you are going to buy the food in the house. So if I'm going there, what is the cost that I'm going to be spending? What is the benefit that I'll be enjoying? Will the cost be higher than the benefit? If yes, then I won't go again. I will stay. So the cost benefit analysis over here is that the preparers of the financial statement or the public sector entities, they will say that, okay, if I want to make sure that the financial statement is having all these characteristics, this is the amount that I'm going to be spending. I have to employ a lot of people to handle the volume of the transactions that we are undertaking. I have to employ the service of an independent auditor to verify my financial statements. Okay, after all these costs, what benefits, if I issue the financial statement out, what benefit will it bring to us? Is it going to increase our sales? Will people trust us and now try to buy from us? Are we going to get any investments as a result of this? So we look at what is the cost? What is the potential benefit that we are going to be getting from it? Is the potential benefit higher than the cost? If yes, then we can go ahead and spend to get all the characteristics that we want. But if the cost is higher than the potential benefits, it's just like, why will I spend money and at the end of the day, I won't get anything from it? So you won't be able to spend the money. So you leave the financial statement like that. Okay, whatever want to happen should happen, because I cannot spend much and I will not be getting anything from it. All right, Sinakafi, I hope you have gotten it. It's just like some people spending on their girlfriend with the mindset that they are going to marry them. If you should know from the beginning that you're not going to get married to the person, you will not be spending money for anything, because you are going to be losing. You will spend and you not get anything. But they look at the benefit. Okay, I'll get married to this person and this person will give birth to my children. So that is the benefit. So they look at the benefit and say that, okay, I'm going to be benefiting more from spending. So let me just go ahead and spend. Okay, so that is it. So you just look at the cost that you are going to be getting and the benefit that you'll be getting. You compare the two and you make your decision. Thank you very much, Osine. All right, any other question? All right, so if there are no other questions, please, I want us to end it over here and we'll meet on Wednesday. Thank you very much for coming.